What is poppin'? It is a Slapton. I am but a lowly Slapton riding these DeFi waves. And in this video, I want to tell you what my thoughts on the UST, Luna, Terra, depegging situation. And I want to give you my opinion on what I believe to be the fundamental mistake when people evaluate DeFi and what I think is one of the most pernicious and pervasive misunderstandings of value creation surrounding DeFi that is illustrated by this very event. So first is what is exactly going on. UST, which is an algorithmic stablecoin on the Terra blockchain, has fallen off its dollar peg, meaning today, Monday, at one point, it was valued as low as 90 cents, which is a 10% departure from the dollar peg it should be on. Now, it has fallen to 15% lower than the dollar peg in the past, but this does not bode well for confidence, and it shows the fragility of these algorithmic stablecoins and how they're built. So these algo stablecoins are not backed in any way, shape, or form by any sort of fiat. Instead, the way that UST works is through arbitrage. It has a sister coin called Luna. Luna is the native token to the Terra blockchain. If UST goes above a dollar peg, Luna can be exchanged for the UST, and that creates an equilibrium of supply and demand, and that should bring UST back down to the dollar peg. And the inverse is true. If UST goes below a dollar peg, it can be exchanged for Luna, and it will be brought back up to a dollar peg. Now, that all sounds good and dandy, but where does the value of Luna come from? Well, Luna comes from the use case of it and the demand for it in much the same way that there might be demand for Ethereum because it powers an ecosystem of dApps and things of that nature, right? So if people want Luna because either they want to invest in it, they think it's a bullish investment, or they want to use the ecosystem, they're going to need the Luna token. All dandy up until this point. But what if there is a market correction? What if there is a massive sell-off in the TradFi markets that were created by Fed hikes in the United States, rate hikes by the Feds in the United States, and it trickles all the way to the crypto markets, and the crypto markets lose confidence and people want to pull assets out, and you have this major sell-off? Well, what happens then? Well, that is exactly what happened. People pulled UST out of exchanges, they pulled them out of lending platforms, and you saw this massive sell-off of UST because presumably people felt that there were safer havens to put their assets, because in times of economic recession, people tend to put their assets in safe havens. Now, maybe that was more centralized stablecoins, maybe that was in good old-fashioned fiat, maybe that was in gold, maybe it was that in real estate. I don't know, but they pulled it out of UST. And that sell-off was so extreme that the Luna that would be exchanged for UST wasn't enough to keep the price of UST at the peg. It just kept pushing down. That sell pressure was relentless. And what it ultimately did is not only are we pushing the price of UST down, but it's also pushing the price of Luna down. Because at the end of the day, Luna's only valuable if people want it. But in an economic recession, people aren't risk on, and they're probably not going to invest in something like Luna if it was a full-blown blow-off top bull cycle, right? And on top of that, on top of that, we have the number one protocol in the Terra ecosystem, which would be Anchor. And Anchor, if you guys are unfamiliar, is a platform to lend cryptocurrency, specifically UST, borrow and lend UST. So people want Luna because the ecosystem is built around a lending platform primarily. There are other instances of use like Mirror, which is used for synthetic assets. Like, I'm not going to short sell Terra, but like, this is the protocol. If you've heard of any protocol in Terra, you've heard of Anchor. So people want Luna because they can use Anchor, and Anchor is used to borrow and lend UST. And people want UST because it's backed by Luna. It's smoke and mirrors. The value of one is backed by the value of the other, and the value of one is backed by the value of the other. Where is the exogenous revenue streams? Now, to be fair to Terra, there are revenue streams outside of Ponzi-nomics, and that would be that they are a payment settling layer, the same way that a credit card charges its vendors a certain fee to settle the payments. Terra will do that for its vendors and its ecosystem. So good on them for that. But the majority of the valuation of Terra is coming from future investors pushing the price up and paying off earlier investors, essentially. Right? And that exists in all forms of investment. But, if you look at something in the TradFi world like Amazon, etc., they have exogenous revenue stream other than the greater fool coming in and buying something at a greater price. And so this is the fundamental problem that I think exists in all of DeFi. People believe because we've invented a new technology and we've figured out decentralized ledger technology, and because we've cut out the middleman, then the fundamental tenets of value creation no longer apply. There's these smart people who are able to convince themselves and others that value can be created through tokenomics and Ponzi-nomics, and that is simply not true. And when these bear markets come, it becomes very obvious which protocols are actually creating value and which ones are just selling the next investor. This is an example of it. I hate to say it, right? So unfortunately, what this means is we're going to see ramifications that go even beyond this ecosystem, because a lot of crypto is tied together. As an example, Bitcoin might be affected by this, probably will be affected by this, because now one of the groups that is basically safeguarding the value of Terra has invested in reserves of Bitcoin. They've purchased that in case a scenario like this happened, and that was good foresight. But this is what it means for a Bitcoin holder. Now they've given $750 million to market makers, and those market makers are going to sell off Bitcoin, or could potentially do that, to defend the price of UST. So we had this Ponzi-nomic, completely unsustainable protocol that had very little exogenous revenue creation, that is now failing, and is going to take with it to some degree Bitcoin. Now, there's also all of these lending protocols that are leveraging Anchor as an example. Like Orion, you would give them your money, or your assets, they would take your assets, they would lend them into Anchor, and then they would get the APY on that, and basically they were doing it for you. They were the middleman in case you had your assets on a different chain. Might they be affected, right? And one more thing about Anchor. Here's one more lesson to be learned. If a protocol is promising you 20% APY year in and year out just for staking, passively staking, you need to be wary of that protocol. Because if you dig into Anchor, and this article will lay it out better than I ever could, they have been hemorrhaging money because the amount of money that they generate through their protocol has not covered their expenses, has not covered their payouts. And they have gone through hundreds of millions, I believe billions of dollars of loans and they're pulling economic rabbits out of their hat. But this is not solvent. This is not sustainable. So those are the two lessons going forward as we go into this bear market. And when you want to rebuild your portfolio, the things I would think about are, what are the exogenous revenue stream of these DeFi protocols? How are they actually generating wealth? Now, to me, there are two exceptions to that. This is not financial advice. None of this is financial advice. This is just for entertainment purposes. And that would be Bitcoin and Ethereum. And I think that they are so far and away advanced beyond all these other up-and-comers, and they have such a network effect that they can get away with essentially being stores of values or being utility token that people are inherently going to want, right? But did people really want Terra? Like, what was the use case for it? Again, it was Anchor, and I'm not, people are going to say, well, it was Mirror too. Yeah, how many of you used Mirror, right? It was Anchor, and Anchor was used as essentially a promise of a high rate of return that wasn't sustainable. So that's number one, is what are the revenue streams? How are these protocols generating revenue? The other thing is, if it seems too good to be true, 20% APY return on stables, probably is. Tell me what you think. Let me know what your opinions. Tell me why I'm wrong. Tell me why I'm a boomer for liking Ethereum and Bitcoin. Tell me why Terra is the best thing of all time. Tell me why you're aping into this, etc., etc., etc. Do you think tokenomics and Ponzi-nomics are a substitute for the fundamental principle of value creation? And one last thing is, join my Discord server. It's not mine, it's our Discord server. It's a bunch of guys talking about crypto, and it's intelligent people that you may be familiar with if you are following this channel. And all we do all day is talk about this stuff. We talk about investments, etc., etc. We talk about carbon markets, you name it, we talk about it. So I will leave a link for that in the description of the video, and I will catch you all in the next one. Peace, dudes and dudettes.